Hi there, welcome back to my channel Training Express. Today is session number 10, but before we talk about today's session, let's have a look at the answer of last session's question.
Question was, Stacy's Consulting purchased office equipment for $3,500. Business paid $1,500 cash and promised to pay the remaining amount in future. Question number 1. How many accounts are affected in this transaction? Question number 2. Which account will be debit and which account will be credit? So the answer is, there are 3 accounts affected in this transaction: office equipment, cash, and accounts payable. And the answer to second question is, we will debit office equipment with $3,500. We will credit cash with $1,500. And we will credit accounts payable with $2,000.
Okay, welcome back. Today is session number 10, and today we are going to continue our discussion of the accounting cycle. If you remember, in our session number 9, we started discussing the accounting cycle and discussed the first two steps in the accounting cycle: transactions and general journal. Today we are going to talk about the next two steps: general ledger and trial balance. Let's have a look at today's session number 10.
In the last session, we talked about first two steps in the accounting cycle, and that is, when a transaction occurs, first of all, we record that transaction in the general journal. Today we are going to talk about next two steps, and they are general ledger and trial balance. So let's look at the discussion about step number 3, general ledger, and step number 4, trial balance. Now we will start our discussion about general ledger and trial balance in detail. General ledger is an accounting book where we prepare multiple T accounts or ledgers following the double entry accounting system. Information in the general journal is linked with general ledger, and this process is called posting. Each ledger account is then balanced at the end of an accounting period, and the ending balance is calculated and transferred to trial balance. Before we start our discussion about general ledger and trial balance in detail, let's have a look at chart of accounts. Chart of account is nothing but a list of accounts appearing in our accounting books. These accounts are given a specific account number. Traditionally, accountants have practiced that all the asset account numbers will be starting with number 1. Liabilities should be starting with number 2. Equity accounts should be starting with number 3. Revenue accounts should be starting with number 4. And all the expenses would be starting with number 5. Again, these are just based upon the accounting practices, but you can create your own list of accounts along with their numbers the way you want. Now let's have a look at, first of all, if you would see, we have listed all of our assets. And try to look at that. Cash, we have assigned a number, let's say 1000. You can even assign a number which is consisting of 3 digits, 4 digits, 5 digits, and so on. So that's basically your choice, whatever the number of digits you want to assign to a specific account number. But anyway, once you decide on that number, you have to consistently practice with all other accounts as well. So here you can see cash is 1000, account receivable 1010, computer 1020, furniture and fixtures 1030. So you can see here there is deliberately a gap of 10 is left in between two accounts. The reason is that later on you might need to add few more accounts, so it's better to give a certain gap of numbers so that we can easily add more accounts later on. After the assets, if you look at, we have got liabilities, and liabilities should be starting with the number 2. In this case, you can see we have assigned 2000 account number to accounts payable, and that is the only liability in this particular example. After liabilities, you can see we have got equity, and in the equity we have got Stacy's capital and Stacy's withdrawals. So the capital we are assigning a number 3000, and withdrawals we are assigning a number 3010. Once we are done with the balance sheet accounts, assets, liabilities and equity, now we can move on to the income statement accounts, which are revenue and expenses. So let's look at the revenue. You can see we have only one revenue account in this example, and that is service revenue. And we have assigned it 4000. So this is the account number for revenue. After revenue, we have got expenses. And in this particular example, we have only two expenses. One is the rent and the other one is advertising. So to the rent we have assigned 5010, and advertising we have assigned 5020. So you can see here again all the assets are starting with number 1, liabilities starting with number 2, equity starting with number 3, revenue starting with number 4, and expenses starting with number 5. Now let's continue our discussion about the same business transactions which we discussed in the previous session. If you remember, we prepared a general journal from the 10 different transactions of Stacy's consulting business. We will continue our discussion, and now we will prepare general ledger from the same business transactions. Let's look at the top general journal. Our first journal entry was cash debit by $5,000 and Stacy's capital credit by $5,000. Before the debit and credit column, you can see there is a PR column, posting reference. In the posting reference column, we will write the account number of the account which is being debit or credit. So here you can see cash is a debit, so we will write the cash account number which is 1000. Stacy's capital is credit, so we will write the account number of Stacy's capital 3000. Now let's try to link journal and ledger. So in the entry you can see cash is debit by $5,000, and we will do the same thing in the cash ledger. So we will write $5,000 on the debit side. Now you can see Stacy's capital is credit by $5,000. So we will write $5,000 on the credit side in Stacy's capital account. Let's look at this posting process again. You can see that $5,000 was a debit in the journal entry with cash account, and here you can see we wrote $5,000 on the debit side of the cash account. Then Stacy's capital was credit by $5,000, and you can see we wrote $5,000 on the credit side of the Stacy's capital. Now again you can look at the posting reference. You can see cash posting reference is 1000, and you can see it here. And similarly, Stacy's capital account is 3000, and you can see for posting reference we will be using the same account number over here. Now this is the time to balance each of these ledgers. So first of all, we can look at the cash account, and you can see the debit side total is $5,000. There is nothing on the credit side, so credit side total will be 0. So now we can see that there is a debit balance of $5,000 so far in this cash ledger. Now let's move to the Stacy's capital account, and let's total the credit side, which is $5,000, and there is nothing on the debit side, so it will be 0. So ultimately we will have a credit balance of $5,000 in the Stacy's capital account. Transaction number 2, you can see here that rent expense is debit by $1,000 and cash account is credited by $1,000. In the PR column, rent expense account number 5010 and cash account number 1000. Now let's see how we can link together journal and ledger. Rent expense debit by $1,000. So we will write $1,000 on the debit side of rent expense account. Similarly, cash is credited by $1,000 and we will credit cash by $1,000. Remember, on the debit side, $5,000 is already appearing, and that is coming from the transaction number 1. And this process will continue. So now what we can do, we can look at the posting process again here. You can see that rent expense was debit with $1,000, and we have written $1,000 on the debit side of the rent expense ledger. Similarly, cash account was credited with $1,000 and we have written $1,000 on the credit side of the cash account. Now look at the posting reference. So here you can see rent expense account number is 5010. So you can see it is appearing there. And similarly, cash account number is 1000, which is also appearing here. Now this is the time to balance each of these ledger accounts. So you can see the total debit on the rent expense is basically 1000, or in other words, $1,000. Credit side has no total. In other words, there is no transaction on the credit side, so credit side total will be 0. So we can easily obtain a debit balance of $1,000 for the rent expense account. Now let's move to cash ledger and let's total each side of the account. So first of all, total debit side balance of the cash is $5,000 and the total credit side balance is $1,000. Now we can calculate the balance or difference between the debit and credit side, and you can see that we have got a debit balance of $4,000 over here. Now before we finish discussing this transaction, we have to remember one thing, that there will not be any rent expense transaction after this particular transaction. So we will treat it as an ending balance of the rent expense account. Because this is an ending balance, so this ending balance will now move to trial balance. Transaction number 3, journal entry is computer account debit $1,200 and accounts payable credit $1,200. In the PR column, you can see computer account number is 1020 and accounts payable account number is 2000. Now let's try to link journal and ledger together. Computer debit with $1,200, and you can see we are writing $1,200 on the debit side of the computer account. Similarly, accounts payable is credit with $1,200, and you can see we are writing $1,200 on the credit side of the accounts payable. we can look at this posting process again. You can see computer was debit by $1,200 and we have written $1,200 on the debit side. And similarly, accounts payable was credit by $1,200 and we have written $1,200 on the credit side. Similarly, we can look at the posting reference. You can see computer account number is 1020 and accounts payable account number is 2000. Now this is the time to balance each of these ledgers. So let's total the debit side of the computer, which is $1,200. There is nothing on the credit side, so we can easily obtain our ending balance of the computer of $1,200. Now let's move on to the accounts payable account. There is only one transaction on the credit side, so credit side total will be $1,200 and our ending balance will be a credit balance of $1,200 so far. Now at the end, I would like to remind you that there is only one transaction related to computer in this particular example. So it means the balance of $1,200 is basically the ending balance for this particular account. So because there is no more transaction here in this account, so this ending balance of computer will move to trial balance. Let's look at this next transaction. Look at the journal entry. Furniture and fixtures debit by $2,300 and accounts payable credit by $2,300. Look at the PR column. You can see furniture and fixture account number is 1030 and accounts payable account number is 2000. Now let's try to link journal and ledger together. Furniture and fixtures debit by $2,300. So we will write $2,300 on the debit side of furniture and fixtures. Similarly, accounts payable is $2,300 credit and we will write $2,300 on the credit side of the accounts payable. Again, try to note that $1,200 is coming from the old transaction. So let's look at this posting process again. You can see that furniture and fixtures is debit by $2,300 and we are writing $2,300 on the debit side of the furniture and fixtures. Similarly, accounts payable is credit by $2,300 and we are writing $2,300 on the credit side of the accounts payable. You can also look at the posting reference. You can see that furniture and fixture posting reference is 1030 and for accounts payable it is 2000. Okay, so this is the time to balance our ledger accounts. Let's look at the furniture and fixtures account first. As you can see, the total on the debit side is $2,300 and there is no transaction on the credit side. So our ending balance will be a debit balance of $2,300. Now let's move towards the accounts payable. And you can see that the total on the credit side is $3,500. As there is no transaction on the debit side, so our ending balance for accounts payable will be a credit balance of $3,500. Now before we move on, there is no more transaction for furniture and fixtures in this particular example. So we will treat the ending balance of $2,300 as the final balance, and this final balance will be moved to trial balance. Now let's look at our next transaction. Look at the journal entry. Cash debit $2,700 and service revenue credit $2,700. Please check the posting reference column. Account number for cash is 1000 and account number for service revenue is 4000. Now let's try to link journal and ledger together. Cash is debit by $2,700, so we will write $2,700 on the debit side of cash. Service revenue is credit by $2,700, so we will write $2,700 on the credit side of service revenue. Let's check the posting process again. You can see that cash is debit by $2,700, so we are writing $2,700 on the debit side of cash. And service revenue is credit by $2,700, so we are writing $2,700 on the credit side of service revenue. Let's check the posting reference. You can see cash posting reference is 1000 and posting reference for service revenue is 4000. Now this is the time to balance each of these ledger accounts. So let's look at the cash. Total on the debit side is $7,700 and total on the credit side is $1,000. The difference between the debit and credit side is an ending balance of $6,700. Now let's look at the service revenue. As you can see, there is nothing on the debit side, so the total on the debit side will be 0. And the total on the credit side is $2,700. So this way we can calculate our ending balance here of $2,700. Next transaction, look at the journal entry. Advertising expense debit $250 and cash credit $250. Look at the PR column. Advertising expense account number is 5020 and cash account number is 1000. Now let's try to link our journal and ledger together. So advertising expense is debit by $250, so we will write $250 on the debit side of advertising expense. And cash is credit by $250, so we will write $250 on the credit side of the cash account. Let's look at this posting process again. As you can see that advertising expense is debit by $250, so we are writing $250 on the debit side of advertising expense account. And similarly, cash account is credit by $250, so we are writing $250 on the credit side of the cash account. Let's check the posting reference. Advertising expense posting reference is 5020 and cash posting reference is 1000. Now this is the time to balance each of these ledger accounts. So let's first look at the advertising expense account. The total on the debit side is $250 and total on the credit side is 0. So we will be having an ending balance of $250. Now let's look at the cash account. The total on the debit side is $7,700 and total on the credit side is $1,250. Now you can see that debit side is greater than the credit side, so we will be having an ending balance of $6,450. Before we move on, we need to notice here that there is no more advertising expense transaction in this particular example. So the ending balance of this account will be treated as the final balance. And now this final balance of $250 will be moved to trial balance. Let's look at the next transaction. Journal entry, cash debit $1,500 and Stacy's capital credit $1,500. If you will look at the PR column, cash account number is 1000 and Stacy's capital account number is 3000. Now let's link journal and ledger together. So cash account is debit by $1,500. So we will write $1,500 on the debit side of cash account. Similarly, Stacy's capital is credit by $1,500. So we will write $1,500 on the credit side of Stacy's capital account. Let's look at this posting process again. Cash is debit by $1,500. So we are writing $1,500 on the debit side of cash account. And Stacy's capital is credit by $1,500. So we are writing $1,500 on the credit side of capital account. Let's check the posting reference. You can see cash posting reference is 1000 and Stacy's capital posting reference is 3000. Now is the time to balance each of these ledger accounts. So let's start with the cash. Total on the debit side is $9,200 and total on the credit side is $1,250. As you can see that the debit side is greater than the credit side, so the ending balance of cash will be $7,950. Now let's move to the Stacy's capital account. Total on the credit side is $6,500 and the total on the debit side is 0. So the ending balance will be $6,500, which is actually a credit balance. Now before we finish the discussion, we need to note here that there is no more capital transaction in this particular transaction. So the final balance of $6,500 will be treated as the ending balance, or you can say ending final balance. So this ending balance now will be moved to trial balance. Okay, let's look at our next transaction. Look at the journal entry: accounts receivable debit by $5,000 and service revenue credit by $5,000. Look at the PR column. Account number for account receivable is 1010 and account number for service revenue is 4000. Let's try to link journal and ledger together. Accounts receivable is debit by $5,000, so we will write $5,000 on the debit side of accounts receivable. Service revenue is credit by $5,000, so we will write $5,000 on the credit side of service revenue account. Let's look at the posting process again. As you can see, that account receivable is debit by $5,000. So we are writing $5,000 on the debit side of accounts receivable. Service revenue is credit by $5,000. So we are writing $5,000 on the credit side of service revenue. Let's check out the posting reference. You can see accounts receivable posting reference is 1010 and service revenue posting reference is 4000. Now this is the time to balance each of these ledgers. So let's start with the account receivable. Total on the debit side is $5,000 and on the credit side it is basically 0. So our ending balance will be a debit balance of $5,000. Now let's move to service revenue. You can see that on the credit side total is $7,700 and on the debit side there is 0. So our ending balance will be a credit balance of $7,700. Now before we move on, we need to note here that there are no more transactions for account receivable and service revenue. So we will treat the ending balances of these accounts as final balances. So account receivable ending balance will be moved to trial balance, and similarly ending balance of service revenue will also be moved to trial balance. Let's look at this next transaction. You can see the journal entry: withdrawals debit $750 and cash credit $750. Look at the PR column. Account number for withdrawals is 3010 and account number for cash is 1000. Let's try to link journal and ledger together. Withdrawals debit by $750, so we will write $750 on the debit side of withdrawals account. Cash is credit by $750, so we will write $750 on the credit side of the cash account. Now let's look at the posting process again. As you can see that withdrawals are debit by $750, so we are writing $750 on the debit side of withdrawals account. Cash is credit by $750, so we are writing $750 on the credit side of cash account. Let's check out the posting reference again. You can see withdrawals posting reference is 3010 and cash posting reference is 1000. Now this is the time to balance each of these ledgers. So let's start with the withdrawals account. Total on the debit side is $750 and there is nothing on the credit side. So our ending balance will be $750, which is a debit balance. Now let's move towards the cash ledger or cash account, and let's total the debit side, which is $9,200, and if we total the credit side, it comes to $2,000. As you can see that the debit side is greater than the credit side, so our ending balance will be a debit balance of $7,000. Now before we move on, there is no more transaction for withdrawals in this particular transaction, so the ending balance of withdrawal account will be treated as the final balance. This balance will be moved to trial balance. Okay, this is the last transaction of today's session. Let's look at the journal entry. Accounts payable debit $1,200 and cash credit $1,200. Look at the PR column. Accounts payable account number is 2000 and the cash account number is 1000. Let's try to link journal and ledger together. Accounts payable debit by $1,200, so we will write $1,200 on the debit side of accounts payable. Similarly, cash is credit by $1,200, so we will write $1,200 on the credit side of cash account. Let's look at the posting process again. As you can see that accounts payable is debit by $1,200, so we are writing $1,200 on the debit side of accounts payable. Similarly, cash is credit by $1,200, so we are writing $1,200 on the credit side of cash account. Let's check out the posting reference for accounts payable. It is 2000 and for cash it is 1000. Now this is the time to balance each of these ledger accounts. So let's look at the debit side of accounts payable, which is $1,200 in total. And now look at the credit side of the accounts payable. So the total is $3,500. Now you can see that the credit side is greater than the debit side. So our ending balance will be a credit balance of $2,300. Now let's move towards the cash account. The total on the debit side is $9,200 and the total on the credit side is $3,200. As you can see that the debit side is greater than the credit side, so our ending balance will be a debit balance of $6,000. Now as this is the end of the transactions, so it means that the ending balance in each of these accounts will be treated as the final account balance. So accounts payable ending balance will be moved towards the trial balance, and similarly ending balance of cash account will also be moved towards the trial balance. Now this is the time to prepare our trial balance. Trial balance is simply a list of ending account balances in the general ledger. Let's prepare the trial balance on January 31. You can see here we have got first column account number, second column account name, third column is debit column, and fourth column is credit column. Now let's look at these accounts one by one. First of all, we will look at assets. Cash, accounts receivable, computer, and furniture. We will be listing our assets first of all. Try to note here another thing. Normal balance for all the assets is debit, and that is why you can see that we have written their ending balances in the debit column. Then we move on to liability section, and in this case we have got only one liability, which is accounts payable. Liabilities normally carry credit balance, and you can see accounts payable, we have written it in the credit column. Then we move on to third section, which is basically equity section. So you can see here we have got two accounts, Stacy's capital and Stacy's withdrawals. Capital's normal balance is credit, and you can see it, we have written it in the credit column. Withdrawals normal balance is debit, and we have written it in the debit column. Then we move on to revenue section. Here we have got only one type of revenue, which is service revenue. And you can see here that service revenue $7,700 is written in the credit column because normal balance for revenue is credit balance. Then at the end we are looking at expenses. So we have only two expenses in this example. One is rent and the other one is advertising. If you remember again, normal balance for all the expenses is debit. So that is why we have written it in the debit column. Last but not least, when we are done with preparing the list of these accounts, then we have to total both the debit and credit column, and they must always be in equal. So that is why you can see here when we look at the total for the debit column is 16,500 and total for the credit column is also 16,500. At the end of this discussion, let me ask you a simple question. Debit balance of each GL account moves to debit column and credit balance of each GL account moves to credit column in trial balance. Is it true or false? For the answer, please check out my next session.
Okay, guys, this is the end of session number 10. Let's look at what we have learned today. Today we learned how we can prepare general ledger and trial balance. General ledger is simply a collection of various T accounts or ledgers, and trial balance is simply a list of ending balances of each ledger account at the end of a certain accounting period. I hope you liked today's session. Please stay tuned for more accounting lectures and don't forget to subscribe to my channel. Thanks for watching.